Boring investors imitate patterns, not outliers. A lot of stock people have heard of Jesse Livermore. Now, Jesse Livermore, if you'd have been alive about 90 years ago, you for sure would have heard of him because he shorted the stock market right before it crashed in October 1929. He made about $100 million, which is $4 billion today.
Wow.
And a lot of people imitated him and they invented something called day trading as a result. Well, unfortunately, every single person I know, Jason, and I don't know that many people in stocks, but every single person I know that has tried to day trade has failed. Every single person I know that actively moves money in and out of stocks fails. Same with Bitcoin.
But I'll tell you something, Paul. They had a good story one day and talked about how one day they made a fortune or one week
One
they made a
day.
fortune, but it just never lasts. It's like the gambler in Las Vegas, right?
Yeah.
They'll have a great run and then they'll just give it all back.
Yeah, it's absolutely true. And sadly, tragically, Jesse Livermore couldn't even imitate his own success, and he took his life 11 years later,
Oh,
around 1940. Jeff Bezos asked Buffett, he said, your strategy's not that complicated. Why doesn't everybody just imitate you? And Buffett said, no, no, nobody wants to get rich slowly. And it's just, that's a funny thing to say. Charlie Munger was asked about this, and he said, why do people think they should pick their own stocks? We don't design our own electric motors or build our own egg beaters, do we? And I just thought that was great. And again, it just promotes what you're doing. You're helping people by passively letting somebody else do the heavy lifting so they can focus on their life, their family, their day job, their career. And it's just a great strategy. Boring investors don't have a crystal ball and they don't pretend to. Peter Lynch says those who live by a crystal ball are destined to eat glass. And if you are trying to take things outside of your control and just betting on, interest rates going a certain direction, the economy doing this or that or whatever, if you're basing your investment thesis on things outside of your control that may or may not happen, it's a pretty risky way and a pretty good way to lose money. And I know that I made a lot of mistakes early on like that. Boring investors are really patient. Charlie Munger said the big money is not made in the buying or selling, but in the waiting. And of course,
hmm.
real estate investors do that really, really well. If we buy and hold something for many years, we're waiting a long time. Like you said, it took a long time to start getting testimonials, but over time, those are better testimonials, better stories, right?
Yeah, much better and much more reliable. Those people today are all still rich.
Yeah,
They never
right.
gave it back, you know? Yeah.
Yep. I know we got to land the plane pretty soon here, but boring investors say no a lot. Of course, Buffett again, he said the best investors say no a lot. The very best investors say no almost all the time. And Wellings Capital, our company last year, said no over 99% of the time as we passed on all but five of 745 operators and investments we took a look at. Boring investors invest in relationships. A lot of people who are on their deathbed, Lee Iacocca famously said, no one on their deathbed said they wished they'd spent more time at the office. I can't judge anybody who's failed in this way because I know I failed. I told you I have four kids, but man, they grew up watching me be driven, watching me work way too many hours. And now that the kids are all out of the house, I've learned to slow down. I've learned to be a boring investor, but honestly, I missed a lot of fun years with those kids. They're all doing really well. They love me, but I can never get those years back. I wish I'd have known this concept. Boring investors invest in happiness. Have you seen these studies, Jason, like from Harvard and others that say that globally there's a happiness satiation point?
Yeah.
And when they did the study 10 years ago or whatever, it was 75, $95,000.
Yeah.
Let's say it's
So
200,000. It
just
doesn't
invest that,
matter.
adjust that for inflation. And it's all that's the income number, but there's
Yeah.
also the net worth number, right?
Yes.
I don't know what that number is nowadays according to these studies, but I remember reading it in a paper magazine years ago,
Yeah.
and it was like 1.6 million net
Right.
worth,
Yeah.
was more than enough to be happy now. That was like 25 years ago. So adjust for inflation, obviously, and adjust the income for inflation too. But people are so misled. Money will not buy you happiness, folks.
Right.
Neither will poverty. Okay. But
Exactly.
you only need like to get to a certain point, and then it's all just a game.
Yep, it's absolutely true. And so, I mean, if you're already making, let's say that happiness satiation level is $180,000. If you're already making 180,000, does it make sense to work 10 more hours a week? Does it make sense to miss your kids' games for that? Jason, the day you and I met for coffee, if you recall that,
I know we had like a 3 hour coffee meeting.
yeah, well, that same day, I also met some investors in West Palm Beach, and one of the guys there was driving a Ford Explorer, and he just seemed kind of boring. But I just knew there was more to his story. I said, "So what do you do for a living?" He goes, "I go to my kids' games and I flip a few houses." I said, "No, no, tell me
He's
more."
probably being modest. He's probably super rich.
He finally admitted to me that he was the former CEO of Home Depot, Ulta, and Michaels.
Wow.
And he had retired early so he could hang out with his kids more.
Yeah. Yeah.
And, I just think that that is such a beautiful picture. And what it reminds me of is this: boring investors invest in the unseen realm where there's apparently no return on investment. And I'm thinking specifically of a man that I hope you'll all look up. His name's William Wilberforce. Now, William Wilberforce had everything. He was 21 years old. He was elected to Parliament, and he was the youngest guy ever elected to Parliament. And he had a massive revelation. He converted his life. He quit all five of the big social clubs he was involved in. He realized the horrors of slavery, and he spent his health, his wealth, his reputation, the rest of his life until he died trying to fight slavery. And he was able to eventually, with a bunch of people that gathered around him, able to eventually cause slavery to be outlawed in the UK. It eventually spilled over into the Civil War and the outlawing of slavery in the US as well. William Wilberforce spent his life on the unseen realm, and apparently he didn't gain any wealth from that, but he's got a legacy that will last for eternity. And
Mm-hmm.
so that's one of the things I want to encourage people to invest to leave a legacy. One of the ways we're doing that, and we want to encourage everybody to look into this, is to look at this issue of human trafficking. Even though slavery was outlawed a couple hundred years ago, unfortunately, it is now the one of the largest businesses on the planet. If you took the record profits of ExxonMobil, Nike, and Walmart, tripled those record profits, you would get the approximate profitability of human trafficking every year. So we encourage people to go check out our partner AIM, AIM. That's aimfree.org.
And I have donated to this organization, by the way.
Yes, and Jason, I've so appreciated your partnership on this. Every year we try to raise money. This number here says Wellings has influenced, raise, and donate over 700,000. It's over $900,000 now that we've influenced for AIM, and we hope that people will check that out. It's boring because you're not actually going and rescuing slaves yourself, but it's a lot more powerful than anything we could do on our own to partner with an organization like AIM. So that's it,
Good deal.
Jason.
All right, Paul. Well, hey, the lesson is be the boring investor, because just be consistent. Do the boring stuff. Don't fall for the siren song of the sexy investment. It's going to, 10x your money overnight. It's just not going to happen. Look, one of the questions that I always ask when someone comes to me with this trading system for the stock market or whatever it is that sounds too good to be true, I ask, look, if this were true, why isn't everybody doing it? I mean, secrets like that don't last, right? If you could buy some piece of software that would trade stocks and make you a fortune, I mean, the stock market is infinitely scalable, right? So in that example, everyone would be doing it. I mean, there are way brighter minds, on Wall Street, people you never hear of that work for companies like Goldman Sachs, right? that do research all the time, all day long, people that work for Berkshire, these people, they would know about it. They would be using it. You would hear about this stuff. So the sexy stuff is almost always a scam, almost always,
Yep.
95% of the time. So just show up every day, do the consistent stuff. That's what works. And Paul, thank you so much for sharing this with us. It's really great.
Jason, thank you so much. It was an honor to be on here again, and I really appreciate your friendship.
Likewise, and keep in touch.